What's going on, everybody? This is the blockchain backer bringing you the latest cryptocurrency news and analysis. Today, we'll take a peek over here at the Bitcoin price chart. We'll talk about the stock market today. Going to keep this one pretty brief. Things are still just, kind of the same as they were yesterday in regards to, where Bitcoin is at right now. It's a mixed market out there on what's happening in here. And yesterday we were talking about what it looks like for the bottom of the 2020 capitulation that happened with C19 and then the continuation of the capitulation back in 2018 and how sitting here right now, hard to draw the conclusion on which way that would go. I pointed to this yesterday. I didn't include the Elliott wave count on there, but I found it pretty crazy to see that Grayscale Bitcoin Trust had already reached all the way back down to the June 2019 high. For a lot of my bear market discussion that I've had on Bitcoin, it's always been, when it goes into a bear market, this is the depth of how far it falls. Obviously, there's a big difference between the Grayscale Bitcoin Trust and actual Bitcoin, but I found it wild to see that it had gotten here. And I was looking over here on Grayscale's Bitcoin Trust to notice that the actual top in here came back on February 22nd. I found that to be interesting in there. And that this would be wave 1, 2, 3, 4, 5, with both of them having A, B, C corrections. And in Elliott waves, many of you know, some people treat the rule very strict. Sometimes there can be slight overlaps that can happen, but in a 5-wave Elliott wave, wave 4 is not supposed to cross over the top of wave 1. And as we can see at this current moment, that is the case for the Grayscale Bitcoin Trust, is that it is still held on top of that wave. But we'll see what comes of that. That's more of just like a confluence thing. I'm not in any way an expert in understanding the ins and outs of how everything works with Grayscale and the discount that happens in here in relation to spot price. As we can see, it's down here at $18.55. We know the spot price of Bitcoin is about $29,000. We also know that this didn't go nearly as high above the all-time high. But one thing interesting too, just from like a time perspective, right? The end of that full bearish period in here, this thing's been in I guess you could call it a bear market for Grayscale Bitcoin Trust dating back to February and going on one of the longest time periods that it's ever been in one. In addition, the length of this correction that we've had in here has been eerily the same size as the last big one. So like for those who are here in 2019 and 2020, we had our big run up back there in the summer. Then we had our C19 sell off and the depth of it. This whole pullback in Grayscale, this has been like going through a big C19 sell-off happening in here. That's the depths of how deep this thing has gone, which is why you maybe see me post Barry Silbert over here occasionally. I always assume everybody knows who Barry Silbert is, but maybe everybody doesn't. Barry Silbert is the CEO of Digital Currency Group, which is the parent company of Grayscale. And that on the day when that hit that level, that's where he posted onward and upward. And still keeping the hopium alive of the decoupling is going to be magnificent. Moving on to talk about U.S. government bonds. I know, very odd to talk about that on here. But the U.S. government bonds have been in an uptrend. The yield has been in an uptrend ever since August of 2020 here, at least on the 5-year yield. And what we can see is it's reached back up to this top. We put us on a weekly time frame here, and you can see how it just rolls. And then this was the height that was set back in October of 2018. And we can see that we have reached right back up here. And it's been during this time period that we have seen the capitulation action happen here in the stock market and in the cryptocurrency market. But what was so interesting that I noticed as I looked back to this time frame right in here, and this was the capitulation time period of cryptocurrency back in 2018, is that when these yields had reached back to these levels. That was true for the 5-year, the 10-year yield as well. This was the price level or the percentage yield level that these bonds were at when we capitulated last time on the 10-year and over here on the 30-year. So whether any conclusions can be drawn from that or not, what we can see is those yields are also at their highs, right? If those yields broke through those levels, that would be the first time we're seeing these yields break out into new highs. And what that would mean for markets, I'm not sure. But I think the thing that's, still, it's just got me unsettled and uneasy out here is what's happening over here in the stock market. What we know is that the Dow Jones Industrial Average has run up to nearly a 4.236 extension over the course of the last 13 years. We know that the S&P 500 did make it all the way up to a 4.236 extension. It was on the infamous day that it actually literally hit the 4.236 extension that the Federal Reserve officials banned themselves from owning any stocks. But as for the Dow Jones, still coming up just here a little bit short. So the big question comes in here, right? And I never want to be the gloom and doom guy when it comes to the stock market, because a million people have tried it. They've tried to time the stock market and say, this is it. This is the Great Depression crash. This is the one that's going to be it. And so far, every single person who's ever done that throughout history has been wrong. So, you don't want to come in and set yourself up with the hall of losers in that one. But, the question comes on whether or not there is some type of additional relief balance that comes out of here. And one thing that we've talked about during many periods of these market cycles has been the double tap, bull flag, breakout, backtest, V bottom, right? You got your double tap, bull flags, breakout, backtest, violent into the bull flags with a V bottom out of here, right? So in these structures, and when these things happen to bubbles, I don't have any circumstances, in which we would come back down below and you get below that level and then this thing just keeps marching upward. That's kind of not something I've seen. And if we started seeing the stock market or the Dow Jones Industrial Average in particular start dipping down below those levels, below 29,500, one has to wonder, is this the Great Depression crash? Was the ABC count off, right? Was I just looking at it incorrectly? I could, the last thing I want to do is come on here and keep doing, here's a new ABC for you. We're going to follow this one. And this one seems the most likely. It's not what I'm going to do, but whether or not did I have it wrong? But it's getting to a point where things have picked up dramatically, right? Ever since the 32,200 did break in there, that's where we started seeing markets really getting moving, and there's been no real signs of stopping coming in here just yet. We have seen the cryptocurrency market at least pause out with a kind of capitulative move happening there. Is that a precursor that, hey, things can start moving back up in the stock market? But, it's definitely concerning to see the stock market moving down the way that it is. And once the stock market does have its Great Depression, whether or not it's starting right now or whether or not there's a wave up to get up to higher extensions and it rolls itself over, just like we saw over there in Netflix, just like we saw over there on Ethereum, the target for the Dow is way down here or lower. We're talking, 5,000s, 4,000s, 3,000s. And, it's still just, the thing too is like, I want to be careful because I know there's people who run and go to the grocery store and they'll load up on everything and think it's the end of the world. And that's not what the point of this is. When we look at how Bitcoin's structure ran up in this manner back in 2018, this was more of just like this is wave 1 happening in here and wave 2 and 3, 4, and 5. With Ethereum, when we got out here and we got above the 4.236 extension, it was more like there was still another roll. And then eventually, once it did cross below here, then it ABC'd up in here. And then the real move started heading on down. But the reality is we're just heading in this straight line down that's just not recovering as of yet. And so long as the line is straight down with no bounds, it's worrying. And so like the thing I can say is that from seeing bubble structures get up here, to see them get up to these 4.236 extensions, to see double tap, bull flag, breakout, backtest, V bottoms, in none of the circumstances do we go below the top of where the actual crash for the V bottom happened at, to where we pull down and then we march on to new highs. I don't have any examples of it like that. That was kind of the marking point to say the whole cycle is done once that got crossed. Of course, by the time we get there, right now the stock market's down about 15% off of its absolute highs. The Dow Jones is, at least. By the time you get down there, you're another 5-10%. I've had people comment saying, hey, what is the Federal Reserve going to do, right? And, right now the Federal Reserve has gotten along with real negative messaging, right? They're like, we will do anything to destroy demand in order to bring inflation down. But it's real funny if you kind of go through like the last, 2-3 years of the wording that's come out of the Federal Reserve. It's almost like their wording has all been very intentional not to spook markets. But right now it's as if their wording is intentional to spook markets. But at the very top of the market, inflation is transitory. Don't worry about it. Everything's good. And then now a lot of fear and negative price action comes in, and we get a narrative change, and they're like, no, destroy, destroy. So I don't know. I know that's something that's on a lot of people's minds right now, including mine. And I'm not a pro on being able to interpret whether or not the Fed is telling the truth or not. We've seen them do both. But tomorrow I will be having Alpha Beta Soup with TXMC over here on the channel, and I'll be recording that tomorrow morning. So it'll be a later release tomorrow. But he had put out a video called "The Fed Wants to Destroy Wealth to Fight Inflation." So we'll talk about that. And I said, let's bring some of that data over to my channel. Let's show the audience what you see, because you understand this stuff better than I do. And I understand he's not a Federal Reserve professional. He's more of just a buddy of the channel, but very intelligent, very analytical, and very effective at communicating. So tomorrow I'm going to be recording with him to talk about the new language coming out of the Federal Reserve and what their intentions seem to be, on the surface at least. But the good news, Bitcoin, crypto live to see another day. Be keeping an eye on this throughout the rest of the day. And then tomorrow it'll be a big morning with that big recording there with TXMC to see if we can get a better grasp on the macro perspective going on out there. But all right, guys, we're going to keep this one short and sweet today. Things just look, real tame out there in the crypto market, similar to how they've looked for the last several days, bouncing up and down in their ranges. Even though they're volatile ranges, still they're just bouncing in there for the last several days after the big event back on May 12th. So not a whole lot to say different in the crypto market from what I've already said. You also notice I'm probably getting this video out early. It's a little bit shorter. I've got to take care of all the kids this morning. My wife is sick in bed with a 100 plus fever. We do have a lot of C19 tests. She took one, came back negative, so that's good. But I'm on duty for the whole household right now. So, all right. I hope that you guys are doing all right. I want to thank you so much for watching my channel. If you could, please like this video and give it a thumbs up. If you're new to the channel, please subscribe and hit the notification bell so you could be notified of when I create new content and when I go live. As always, this is not investment advice, and I am not a financial advisor. But if you ever need a pick-me-up or a little bit of reassurance, just remember that the blockchain backers got your back. Have a good one.